Hi, Assalamualaikum everyone. Okay, in this video, I will share with you continuation discussion on double entry. Okay, let's take a look at this event, this transaction. On 21st February, the business sold 6,000 units of inventory at 12 ringgit each, received a check of 30,000 ringgit and cash of 10,000 ringgit. As I mentioned in the previous video, when you see this term check, always remember bank account. It will be recorded in the bank account. And then when you see the word cash, meaning it will be recorded in the cash account. Okay, so when business receive check, meaning it will be debited. Receive cash, it also will be debited. So automatically, this is the answer I can show you here. So you will debit bank account. You will debit bank account. Then you also will debit cash account. So debit bank account with the amount of 30,000. Debit cash account with the amount of 10,000. Okay, because the business received check and received cash. Okay, however, when you read this question, if you calculate the amount of 6,000 units was sold times with 12 ringgit. So if you calculate 6,000 units times 12 ringgit is equal to 72,000 ringgit. Okay, so but when you look at this transaction, the amount of money received in terms of check is only 30,000 and 10,000, meaning there is a balance of 32,000. Then you manage to record sales as 72,000, so you you will credit sales. Okay, the 72,000. So where are you going to record the balance? Meaning when the sales takes place, the balance of 32,000 is made by credit. This is made by credit. So when the sales is credit sales, you need to record in trade receivable. So you will debit trade receivable. Okay. Now let's move to the next one. SGZ, the business paid 300 ringgit for electricity, 1,000 ringgit for shop rent, and 800 ringgit for employee salary. Okay, so the word paid here. Okay, so since the question is silent, we are going to assume that the payment is made by cash. Okay, so you record the transaction together. Okay, we have electricity expenses. And then you debit electricity expenses, credit rental expenses, and then you will debit another salary expenses. Okay, with the amount of 300, 1,000 and 800. Okay, so you debit all these expenses account. As I mentioned, since the question is silent, we assume the amount is paid by cash, so you credit cash. So the credit will be total of all the three transactions, which is 2,100. Okay, next transaction 28 February, Ahmad withdraw cash 5,000 ringgit from the business for his own use. So we have discussed this in the previous video. If the business owner withdraw for his personal use, it will be recorded in drawing account. So you will debit drawing accounts, and since this involve cash is out from the business, and then meaning you have to credit cash. Okay, so debit drawings 5,000. Credit cash 5,000. Okay, so next transaction. Okay, double entry principle for transaction. So we have here purchases of goods. You will debit. This is debited to purchases. If it's sales of goods, it will be credited to sales. Can you see here is debit? Sales we always credit. Then let's say we have return. Okay, purchases return or return because when business make a purchase and then however the business owner found out that the goods is not in a good condition, so the business owner can return back to the supplier. So this is considered as return outward or purchase return. Okay, so you will credit return outwards. In opposite direction, in opposite situation, if let's say the customer come to purchase the goods, so this is sales to the customer. However, if the customer found out that the goods is not in a good condition, the customer can return back to us, to the business. So this is return inwards or sales return. So return inwards will always be debited. So this is opposite. See here, we have debit return inwards. Then in the different situation, credit return outwards. There are two types of accounts. As you can see here, nominal accounts. So nominal accounts record expenses and revenues. And it is temporary because this nominal account will be transferred at the end of the year to the statement of profit or loss account. Okay, real account is the asset account, liability account, and equity account. So this real account, at the end of the year, the business need to close the accounts and then recorded the amount as balance CD, and in the next day or in the next following year, it will be recorded as balance brought down, balance BD. Okay, there are four types of ledgers as you can see here. Okay, so I will continue this in the next video. Do continue watching. Thank you.